Your bank account can show $10,000 and you can still go bankrupt this month. That is because cash and wealth are not the same thing, and almost nobody teaches you the difference. Here is what happened to a guy named Marcus. He had $15,000 sitting in checking. Felt rich. Then his business tax bill hit, his car broke down, and a client cancelled a contract. Within 3 weeks that $15,000 was gone and he owed more than he had. Marcus did not understand liquidity, assets, and liabilities. Let's break these down so you never make his mistake. First, an asset is anything that puts money in your pocket. A rental property that pays you monthly. A stock that pays dividends. A business that generates profit without you working every hour. Second, a liability is anything that takes money out of your pocket. A car loan. A mortgage on a house you live in. Credit card debt. Most people think a house is an asset. It is not, unless it generates income. Your personal house is a liability wearing a disguise. Third, cash flow is the real king. It is not how much money you have, it is how much moves through your hands every month, and in which direction. Rich people focus on cash flow. Poor people focus on their paycheck. Now let's talk about compound interest, the concept Einstein allegedly called the eighth wonder of the world. If you invest $100 a month starting at age 20, earning 10% average returns, by age 60 you would have over $600,000. Wait 10 years to start, and that number drops by more than half. Time, not amount, is the real multiplier. Next, understand the difference between good debt and bad debt. Good debt buys assets that pay you back, like a loan for a rental property. Bad debt buys things that lose value the moment you own them, like a brand new car. Then there is inflation, the silent tax. If your money sits in a savings account earning 1% while inflation runs at 4%, you are losing 3% of your purchasing power every single year without spending a dime. Finally, understand net worth. It is not your salary. It is everything you own minus everything you owe. A person earning $200,000 a year with massive debt can have a lower net worth than a teacher earning $50,000 who invests wisely. Marcus eventually learned all this the hard way. He rebuilt by tracking his cash flow, buying one small income property, and automating investments before he ever saw his paycheck. 3 years later his net worth flipped from negative to 6 figures positive. So ask yourself right now, is your money working for you, or are you still working for it?